Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the complex world of business filings, and sometimes it feels like deciphering ancient hieroglyphics. But today we have a treasure trove of information from Fidelity Concord Street. Trust a company that manages a whole lot of money for a whole lot of people. We are diving deep into their latest semi-annual shareholder report, a document packed with details about how your money is being managed, and more importantly, what it costs you to have it managed. So grab your favorite beverage, settle in, and let's decode this together. This is a report for registered management investment companies. So basically, it is a deep dive into how these investment funds are doing. This is the umbrella company that holds several different investment funds, and today we're going to look at a few of them to see what story their numbers are telling us. As of the 31st of October 2025. These are snapshot numbers giving us a quick look at the health of these funds. Take for example the Fidelity Small Cap Stock K6 fund with a fund size of $167077. $17, that might sound like a lot, but in the world of investment funds, it is considered fairly small. They hold 147 different investments, and their portfolio turnover, which is how often they buy and sell things, is a whopping 191%. That is super high, indicating a lot of buying and selling, which can mean a lot of transaction costs for investors. The fund's investments are spread across different market sectors. Industrials make up the largest chunk at 21.6%, followed by financials at 17.3%, and consumer discretionary at 13.5%. Healthcare and information technology are also significant. Communication services is at 0%, meaning they are not investing in that sector at all. Most of the fund is invested in common stocks, that is a very high percentage. They also have 3.2% in short-term investments and net other assets or liabilities. This little bit of cash or short-term stuff is mainly for managing redemptions or other immediate needs. The vast majority, 90.7%, is invested in the United States, which is pretty standard for many funds. Canada is second at 2.3%, then Thailand 2.1%, and smaller amounts in Japan, Israel, Puerto Rico, Italy, Taiwan, Sweden, and others. The top holdings are CBEs Incorporated at 3.2%, Laureate Education Inc. at 2.8%, and Sanmina Corporation at 2.2%. These top 10 holdings make up 21.4% of the fund's net assets. This tells us that while they hold 147 different investments, the top ones have a decent chunk of the money. Now let's look at the Fidelity Small Cap Stock Fund. A similar fund, but with a much larger fund size of over $1 billion, $1,172,940,037 to be exact. They hold 148 investments, and their portfolio turnover is 162%, also quite high. The sector breakdown is very similar to the K6 fund, which makes sense as they are likely following similar investment strategies. They also have 96.8% in common stocks and 3.2% in short-term investments. The geographical split is also almost identical, mostly in the United States at 90.6%. Their top holdings are also similar with CBEs Inc. at 3.0%, Laureate Education Inc. at 2.8%, and Fabrinet at 2.2%. Their top 10 holdings representing 21.3%. This fund is even larger with assets over $2.3 billion and 152 holdings. Their portfolio turnover is significantly lower at 75%, which suggests they are holding onto investments for longer compared to the previous two funds. The market sector breakdown has some differences, with industrials and financials still leading, but information technology and consumer discretionary are also quite high up there. They are heavily invested in common stocks at 97.6%, and also heavily focused on the United States at 95.5%. Their top holdings are Laureate Education Inc. at 4.0% and Genpact Ltd. at 3.9%. Interestingly, the total percentage of their top holdings is 26.0%, which is higher than the other funds we've looked at. This means it is more concentrated toward the top companies. What were your fund costs for the last 6 months? Now this is important for every investor. For the Fidelity Small Cap Stock K6 fund on a hypothetical $10,000 investment, you paid $33, which is 0.60% of your investment. For Fidelity Small Cap Stock Fund, you paid $50, 0.90%. And for Fidelity Small Cap Discovery Fund, you paid $40, 0.74%. These might seem like small numbers, but remember, these are costs paid every single year. Over a long period, they add up significantly. This fund has a very interesting cost structure. A cost of a $10,000 investment for 6 months is a measly $0, which is 0.00%. This is because it is a series fund, likely an institutional share class, with significantly lower or even no direct fees for the investor. This is a huge advantage for those who can access it. Now, these numbers point to a key strategy for Fidelity. They offer various share classes for their funds, each with different cost structures. Some have higher annual costs but might have lower initial sales charges or vice versa. It is crucial for investors to understand these differences. For example, Class C shares in the Founders Fund had costs of $104, which is 1.83% of a $10,000 investment. Compare that to the zero cost for the Series Small Cap Fund, and you see a massive difference. This highlights the importance of choosing the right share class for your investment. Looking at the top holdings for Fidelity Large Cap Stock K6 Fund, we see some familiar names. Nvidia Corp is at 7.8%, Microsoft Corp at 6.3%, Wells Fargo C-Arm Co at 5.2%. This large cap fund is very concentrated in its top holdings, representing 43.6% of the fund's net asset. Their portfolio turnover is quite low at 14%, suggesting a long-term investment strategy. Now, when we look at the Fidelity Large Cap Stock Fund, the numbers are quite similar. It is almost identical in sectors, 96.3% in common stocks and 90.7% in the United States. The top holdings are also very similar, with Nvidia Corp at 8.0% and Microsoft Corp at 6.4%. Both funds are investing heavily in the largest companies. However, the costs differ. For the K6 fund, a $10,000 investment costs $26, which is 0.45%. For the standard Fidelity Large Cap Stock Fund, it costs $43 or 0.75%. This difference in cost for very similar investment portfolios is something to watch. Over time, even a small difference like this can really impact your returns. Let's examine the Fidelity Founders Fund. It has a fund size of about $222 million. The market sectors show a strong leaning towards information technology at 28.1% and financials at 19.7%. Common stocks are at a high 99.0%, a significant 83.2% is invested in the United States with a notable 8.5% in Canada. Their top holdings are Nvidia Corp at 7.5% and Alphabet Inc. Class C at 7.4%. So again, very concentrated in a few big tech names or companies closely tied to them. The costs here for the Founders Fund are $45 or 0.79% for a $10,000 investment. But watch this, there is a Fidelity Advisor Founders Fund Class C with zero cost that is 0.00%. The difference here is likely due to how these shares are distributed, perhaps through retirement plans or institutional channels where fees are handled differently. This filing reveals a fascinating story about how Fidelity structures its funds. They offer multiple versions of the same investment strategy with vastly different cost structures. Some are designed for retirement plans with minimal direct investor costs, while others like Class C shares carry higher annual expenses. This tiered approach allows them to cater to different types of investors, but it really demands that investors do their homework to understand what they are paying for. Now let's talk about risks. The report mentions a lot of things that could affect performance, like global economic disruptions, public health emergencies, military conflicts, political changes, and environmental disasters. These are pretty standard disclosures, but it is good to remember that investing always carries risk. They also hold a significant amount in common stocks, indicating that their performance is closely tied to the stock market's ups and downs. Overall, these Fidelity funds are heavily concentrated in large cap US technology and financial companies. Their expense ratios vary widely depending on the share class, a key takeaway for any investor considering these funds. Always check the expense ratio carefully because those costs can eat into your returns year after year. So what do we see here? We see a well-established company providing a range of investment products with differing cost structures. The financials show substantial assets under management for some of these funds. The high portfolio turnover in some of the smaller cap funds suggests an active management style, while larger cap funds show lower turnover, indicating a more buy and hold approach. The key takeaway for any investor is the importance of understanding the fees associated with your investment. Even small differences can have a big impact on your long-term returns. That is our deep dive into these Fidelity funds. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.